Hello, it's Phil from Golf Data Tech with a market update for June 23, and I can say that the market is up this month, which is positive news. 0.7% in value versus 2022, and on a longer term basis, we are 1.9% up year to date versus 22 and 18.6% versus 2019. So there is some solid growth overall in the industry. Growth is weaker in June than it was in May, so we are seeing a slight softening. So whereas we've seen a nice trend in the curve with a kind of a maintained difference versus 22, we have seen a softening this month. So I'm hoping that's more of a blip than a trend, but we will obviously get the data for that when we have July. Clubs down 7%, apparel up 18%, so we've definitely seen a kind of switch in consumer behaviour in terms of where people are spending money. In terms of channels, the on-course is down 2% and the off-course is up 4%. So more money being spent on the off-course for various reasons. Clubs certainly being a driver in the down-course decline because, as I said, they are down 7%. Looking overall, just at some summary views, total value in terms of categories, 5 categories down and 12 categories up, so that's positive. So there's a real mix, but the two biggest categories are down over 7%, so hence why the total value is down. Worst category overall actually was weatherwear this month, but that's a function of the good weather. They were down 23%, so people didn't need rain jackets. Looking at units, that's a similar position to value. That's down in 6 and up in 11. Worst unit category was trolleys, which is really having a torrid time. And then if you look at ASP, we've lots to talk about inflation, but again, we're seeing actually ASP is down in 9 categories and up in 8. So it's not everything is going up. There are some negative trends happening in some of the categories regarding pricing. Finally, inventory, which has been a concern. Things seem to be moving through. It's certainly down versus May quite a lot, so product is shifting, which is great. There are 14 categories that are up versus 22 and 3 down, but we are closer to 2019 figures, so although there has been some growth in inventory, it's not as bad as it was in the majority of categories.